Hi folks, Scott here, and this is the wrap for Monday, November 1st. So before I get into showing you a nugget that'll hopefully help you going into Monday, showing a potential risk factor that I'll be considering, I want to first point out something that no one in my trading group could answer this morning, or maybe I wasn't understanding the responses. But something I noted that I've never noted before, which doesn't mean necessarily that it hasn't been there before, I just haven't noted it, is look at the close on yesterday's bar. Okay, that is Thursday's bar. The close was 1751. 1751. Now, if you go to an intraday chart and look at yesterday's price action. By the way, the monthly close is based upon the cash close time. So it's also a settlement price that you see on a daily chart. So settlement at cash close, which is 4 p.m. And I think someone said it takes the last, unlike other days where it takes the last 30 seconds of trades, it takes the last 30 minutes of trades. That's why you'll often see a big variance between the actual last trade versus settlement, or even the 4 p.m. price. It can be off quite a bit. But here's what's interesting. The low of the entire afternoon yesterday for the ES was 1751.75. So any average, whether it be 30 seconds or 30 minutes, had to be somewhere higher than that. Yet if you look on a daily chart, I even went to the CME website again, is showing the settlement price, the close, 1751. So someone can riddle me that, explain how that could possibly be. I would love to hear, because we checked with several brokerages and everyone's showing the same thing, and it's just something I don't know. All right, enough on that. Let's get into what Monday may bring us. Today was a very interesting day, especially for the first trading day of the month. I thought what would be most helpful going into Monday is show you the results of fading gaps after 3 consecutive lower daily closes. One, today's low, put a new low. Yesterday put in a new low, and the day before put in a new low. So that's 3 consecutive lower daily lows. And to keep the sample size nice and large, and because we're right at the 10-day moving average, let's simply look at when this scenario, 3 lower lows, has occurred above the 200-day moving average. What has happened the next day when fading the gap? And there you go. Almost 2-to-1 odds of gapping up on the subsequent day after 3 consecutive lower daily lows. Using an end of the day stop, not something I recommend, but a good place to start one's analysis. You can see there's a clear long bias. Down gaps have above average win rate and profitability without any huge monstrous statistical outliers. See, these are not that big, about 12, 13 point winners. Very small percentage of the overall total profits using 10 contracts. Just a hypothetical example. However, shorts have had about a 10% lower probability of filling than the average, which is 70%, 17% than the shorts, lower than the shorts, and it's been a significant money loser historically. It does have one big money loser, but still, there's a clear long bias here, and no matter how you want to define it, following 3 consecutive lower lows went above a 200-day moving average. So, might want to keep that in mind. Maybe get positioned for an overnight trade on Sunday night. I'm going to defer and wait for my worksheet and wait for Monday morning. I'll rewind these numbers to see just how tradable this down gap is. And as always, defer to my gap guys before I make my final decision. What I mean by tradable is, is it volatile? If it's real volatile, use an intraday stop, that number could fall apart because that number is using an end of the day stop. All right, let me show you what. Hold on, let me get, whoops. The worksheet showed, and honestly, this could be a very short, I've already taken a fair amount of time. These were nominal gaps, there were just no real gaps to speak of, but if you're new or interested in becoming a member, let me just show you what members get. Our worksheet, which breaks down the gap, averaging all 8 individual indices gap guides, and the 10 different zones, and puts them all in, organized with 4 simple opening areas. And today strongly favored a gap up, 57%. We promoted Rob Hanna last week, a friend of mine who has a great site, Overnight Edges, and his data showed a good chance of gapping up, so quite a few of our members end up going long, can make a little bit of money this morning to the long side. And you see, it really wasn't a bad setup, no matter any zone that we may have opened in today. But day of month, first trading of the month is risky for up gaps and down gaps. In fact, up gaps first day of the month happen almost 3 times as likely as down gaps. So this data was pretty weak for fading in either direction. Sort of an unstable day, if you want to think of it that way. At least that's how I thought about it going into the day. Here's what I wrote in my pre-market comments. See last night's wrap. Friday's first trade of the month. 50-50 down gaps, too small to judge. Overall, slightly attractive guides, but mixed to risky factors for fading in either direction. So, and we had large closing variance. I talked about it a little bit. This isn't even including settlement. Closing variance, I'm just looking at 4:15 price versus 4 o'clock price. 4 o'clock is where the ETFs close. 4:15 is where the futures close. There's 3 points of variance there. So there's a lot of risk there. The zones were just too small. The guides were pretty good, but what I didn't show you was, and I'll show you now, this is the ES. We opened right here 1755. Well, the open from yesterday. Hold on, that's the wrong. No, that's right. Yeah, the open from yesterday was 56.75. I needed a point of opportunity in general, so that takes it to 56. So I had 2 ticks to play with. So it didn't open there, and that's why I basically said payoff's too small, too much like threading a needle, and data was too inconsistent. So I didn't even set anything up today, and didn't miss anything. Small gaps up. I think in all the indices, gap up is represented by the white line. Hold on, that's yesterday. Relative to the blue line, yep, small gap up, small gap up. No gap in the NASDAQ, small gap up in the Dow. So just nothing there today. 15-minute nor first hour range guide showed anything that looked interesting to me, so I just left the market alone, and it doesn't look like I missed a whole lot. We had about 10 points of action here today, but I was happy to take care of get caught up in some other business. Our new closing guides, working hard on those. I know I've been talking about them forever. I'm tired of talking about them too, but they will be here soon. And there you go. That was the wrap for Friday, November 1st. Have a great weekend, folks. We'll see.